Hey guys, welcome to the Smart Venture Podcast. In each episode, we're going to have conversations with some of the top investors, superstar founders, as well as well-known tech company executives in Silicon Valley. We'll have a coffee chat with them to learn their way of thinking and actionable tips on how they build or invest in a successful company. Before we start our show today, I want to make sure the listener, aka you, understand that everything a person say on the podcast only reflects hers or his own opinion, not the show or the company they work at. Our guest today is a managing partner at NFX. NFX is a seed and Series A venture firm based in San Francisco. Prior to NFX, he founded Trulia. He raised funding from top venture firms like Sequoia and Accel, and eventually led the company to a successful IPO. In 2015, Trulia merged with Zillow, and he served on the Zillow's board of directors. His name is Pete Flint. In the last episode, we talk about how Pete started his career in tech, important qualities to have as a founder, as well as personal development journey as an investor and a leader. In this episode, we'll focus more on Pete's career journey as a founder and investor. Please enjoy. What is a particular company that you're super excited about?
Oh, so many companies in our portfolio. I mentioned Mammoth Biosciences before, which we think is just a very, very interesting, really, really interesting company, which is providing rapid COVID testing based on CRISPR technology. So I think but then, we have, other than that, there's many, many companies in our portfolio. I wouldn't want to pick favorites. It's like saying a favorite child. It's like,
just all of them.
We love them all. But there's many interesting.
Let's talk more about the founder experiences that you had. You started Trulia when you were in school at Stanford GSB. At the beginning stage of founding a startup, not everyone brought into that startup idea. Can you tell us more about the early stage of your experiences of starting a company? At what point did you realize that you were onto something?
Yeah, so the origin for Trulia started while I was trying to find off-campus housing while I was a grad student at Stanford. I think, I had many ideas kind of, during the sort of previous couple of years after I stopped last minute. Going to school was just an amazing fertile ground for me, kind of to speak to people, to learn different industries, as well as to have some free space to think of things. So I had so many different ideas, but this was like pretty quickly that I was just captivated by this idea. The first we raised some angel money and then some venture capital. I think where this sort of pivotal moment, I think, in the company's evolution was I think, frankly, when we raised at the time, it was our Series B, but I think today you'd probably think of it more like a Series A funding round. But I guess what happened, we figured out both sides of the marketplace, and Trulia really, back then it's two-sided marketplaces: consumers on one side, and then the real estate industry, and principally listings and agents on the other side. In the sort of previous year to that investment, we raised, we grew our traffic 10x year over year. So we'd figured out all the growth mechanics, and we did that without spending any money. So 10x year over year growth, zero marketing spend. So we figured out all this growth mechanics to scale a massive audience in this high value industry. And on the supply side, we have brought on board some of the biggest brands in real estate. And what was kind of interesting at the time was that, we'd seen, this was, I think, in 2007, this moment, we'd seen the real estate market start to falter in 2006. And so we kind of felt we were one of those sort of like Nigerian marathon athletes or Kenyan marathon athletes, where they were like running at altitude. We just had to be super lean and super efficient. And the real estate industry back then was spending all this money on newspapers, and they wanted to cut costs and still get distribution of their listings. And we offered a proposition which was a tenth of the cost to get this massive exposure. And so we had, essentially these partner BD deals that brought this massive amounts of supply on board. That was accelerated because of the housing recession that was starting. That was the real sort of pivotal moment that we knew we had something kind of really special at that time.
Totally. Pitching a startup to the real estate industry is really tough. Since it's a traditional industry that's heavily relationship-based, you mentioned that you got to the customer first. Curious, how do you sell Trulia to the real estate professionals? What were your selling points back then? And as a founder from another country, how do you establish the local real estate relationships?
Yeah, so we had to build relationships with an industry which was traditionally very risk averse, and frankly very paranoid about technology companies, because there was a perception that real estate agents would go the same way as travel agents, and that technology companies were more foe than friend. I think a lot of this sort of experience was born from my time at lastminute.com, where lastminute.com was essentially saying to hotels, and a big part of the business was saying to these kind of individual hotels, which was very sort of time consuming, but that once done, the defensibility you build was enormous. And I think the same sort of recognition at Trulia is like, it's incredibly painful. There's like thousands and thousands of brokers we would go around to, we had to explain. But once they would start to build a relationship with you, it would be a very, very sticky relationship. I think the other component here is having sort of, I spent a year studying the kind of the real estate industry. So when I moved to the US, I had zero. I didn't even know where Milwaukee is. Like I had no idea kind of where these about US real estate, let alone geography. And so to really sort of deeply understand the industry, and then have an understanding of the customer's business, to be able to say to them, we are good for your business because of X, Y, Z. That was a big investment. Maybe the last thing, like I think for a very traditional industry, myself as a Brit, and then my co-founder Sammy is a Finnish. We were two Europeans trying to build a service in the real estate, and I think people were just like, who are these people? And I think we were just somewhat, I think we were intriguing, and had a sort of a degree of humbleness, I think, which was necessary to kind of help to the industry to partner with us.
So there are two things I find really interesting. One is, how did you have the courage to go after the real estate market? Assuming your experiences at thelastminute.com made you more confident, as you are someone with a lot of entrepreneurial experiences in the past. But the difference is now you're the CEO this time. You probably don't have people that you could fall back on. Another question is, at the very beginning, how do you have the first conversation with the real estate professionals to get the snowball rolling? Was it from friends at the GSB?
Well, this is just an incredible thing about Silicon Valley, that every other person is starting a company, and you sort of like, and you think of that, oh, I shouldn't start a company. I should go and work for Google or Microsoft or Facebook, And I think just this, and then not only is like everyone starting a company, it feels like that's obviously the thing to do, to start a company, but also being around enough brilliant people to kind of bounce ideas off and say, well, what do you think about this idea, this idea, this idea? And that was, that's just truly a remarkable thing about being here. It was sort of very different from the UK. And it's, it's not for everyone. It can be a bit sort of a bubble, but being here and kind of having these interactions, A, helps to amplify your good ideas and sort of pivot your bad ideas. And then B, it gives you the sort of resources and confidence to go for it. I think, the other thing for me is being an immigrant, I felt I had absolutely nothing to lose by starting a company. Like coming to the US, if I literally, like, I felt that if it failed, then, I could go back and my parents wouldn't even know about it. They'd be disappointed I'd lost investors' money. Like, and that immigrant sort of mentality, you have nothing to lose, but also you see the world through different eyes. And naivety is a wonderful thing. That's why great companies are started by often young people, because they don't realize the challenges ahead of them. But they look at industries and they think the industry should be rewired in a different way, or they look at greenfield opportunities and that we need to start a company in that area. So naivety is just an optimism at just wonderful things, and that's something which back then as a 20-year-old was invaluable. As to your question, like as things evolved, what I would do is I felt I learned from investors and mentors for sure, but I probably learned more from peers. So I made a lot of time to invest in spending time with peers, fellow CEOs doing somewhat similar things in different industries, and having dinners with them just to share ideas. And that's both comforting as a leader to know that other people's problems are as bad as your problems, or that that you can start to share kind of tips and tactics and how to get through things.
Absolutely. Who were your peers that you go to ask for advice? How did you meet them and form the relationships? Were they founders who were invested by the same investors? Were they friends from the GSB? How do you meet them?
So I guess, the peers were, fellow founders of marketplace businesses, or, whether they were, people, at LinkedIn or Yelp or Dropbox or companies at that kind of era were people that we would be with. And so I guess connected through them was a combination of sort of going to the same events where hosted by investors to, I remember one founder, he signed up on a service, and I would periodically go through that sort of like who's registering, who are the early adopters, and just look at the email addresses and just, hey, I saw you registered, I see you run this company, I'd love to pick your brains, and 9 times out of 10 they say yes. So I just cold outreach of people, and I think everyone is very much in the same boat. It can be lonely starting a company, and so and people will crave that connection.
Trulia eventually went IPO and got acquired. You came from a founder and CEO to a board member. Can you tell us more about the experiences and things you've learned from being an operator to a board member, then eventually pivot into investing?
Yeah, so I guess to take a step back. So, Trulia we launched in 2005. Zillow launched in 2006, and then roughly 10 years later, the companies combined into a single company. And over the years, we had a couple of goes at sort of bringing the companies together. They would approach us every year or two and just say, "Hey, why don't we join forces?" And we could never really sort of figure out the right sort of set of the right timing essentially, and the right deal structure. And so, but it did, back in sort of 2014, 2015, we did figure it out. And the reason I think we did figure out is both companies were more mature, at that point. Both companies were public. And we were, I think the product innovation was frankly slowing down. And we were just spending a huge amount of money on marketing, sort of and spending lots of money with Facebook and Google and others. And we saw a path to bring the companies together and then really sort of accelerate the product innovation, which I think both teams were excited about. I guess the other thing here is that, the Zillow team was really had very similar backgrounds to myself. So they started, the Zillow team were either started or early employees at Expedia and Hotwire. And so they kind of saw the evolution of kind of like the travel industry and saw, I think, the similar thing that we did at Trulia. So, and the companies were started at the same time, were technology companies. There was incredibly similar DNA, always differences, but like fundamental DNA was the same. And, the sense of the mission was the same. So, I think the sort of process that I went through was, I remember having an early conversation with, or the first conversation with Rich at the time, which kicked off the transaction process. And my first reaction was like, why on earth would we do that? It's a terrible idea. Like, I didn't say that, but like, why on earth would we combine the companies? I'm CEO of a public company, 1,100 employees, multi-billion-dollar market cap. It's like, this is the best job ever. And then I think over the sort of subsequent kind of weeks, through conversations with them, conversations and with my team and board and reflection, you realize that, this is a really interesting opportunity to do something kind of even bigger. And, it was a very, very hard decision, but, I felt it was the right thing to do for all the stakeholders in the company. And I came from being a sort of like, very negative on the idea to being extremely positive on the idea. And so, I have zero regrets in making the decision.
That sounds like an amazing journey. In terms of getting into investing to help other companies to grow, what was the transition like for you? You had brief experience at Battery Ventures early on in your career. Assuming you could have just stayed in VC back then, why did you decide to go found another company then?
Yeah. Well, I think, after the last minute.com experience, I think this is the same for many people. If you have a really great experience in high technology and startups, you just don't want to leave the industry. You want to just find out what role you want to play in that ecosystem. So, I had a terrific time at last minute, and then I was thinking about, the other side of the table. But I, after spending a little bit of time at Battery, I just really felt that I had, I really wanted to build a company. And so that was, and that was partly inspired by the sort of coming up with the idea for Trulia. That's okay, I just need to do this. I really need to do this. And so, 10 years later, after the Zillow Trulia transaction, I actually wasn't sure I didn't want it to be a sort of professional investor or venture capitalist. I wasn't really sure. I was, honestly exhausted from 10 years scaling a company, a 9-month sort of government review, antitrust review of bringing the companies together. So I was just frankly exhausted. So I actually took a year off. I was on the Zillow board and some other things, but it was really just, I just needed to sort of spend the time to reflect. And, between changing diapers and looking after some newborns, like I would be in like meeting with founders. I got like, hundreds of founders that would reach out and say, hey, I'm doing this. Could we chat for coffee? And ended up doing a lot of angel investing at that point. And so investing, a lot in other startups, advising startups. And I just incredibly rewarding, as many people find. So really rewarding, really fun, really interesting. But at the same time, it's sort of very unsatisfactory. Like I love working in teams. I love kind of like having sort of, leverage from software and and kind of scale and a degree of infrastructure. And so investing my money is fine, but I just feel that teams get stuff done better and more effectively. So that was really the sort of wanting to think about becoming a full-time VC as opposed to an individual angel investor. And then I reconnected with James and Gigi, who I'd known for a while, and they just felt, we're just very, very similar DNA. We both founded companies, we both ran companies, we're both angel investors, and so we teamed up and launched NFX. So that and why that as opposed to join, I did get some offers to join some of the traditional venture capital firms. Was really two things. So one is that the idea for NFX was that we felt that at the earliest stage of company growth and formation, we generally had seen that many of the kind of more traditional firms or bigger firms were primarily focused on Series A investing. Like, here's $10 million, it's your Series A. And they would do some seed investments, but you were less, you weren't at the top of the priority list compared to the Series A investments. And I'm generalizing here, but that was kind of what I'd seen. And on the flip side, there were many kind of early stage seed funds that were, great people, but often didn't have the sort of experience of, starting a company and taking it public. And then, the sort of like the whole scale experience that could be a really, really helpful to the most formative years of a company. And so we felt that there was this gap in the market for a really, high quality institutional seed fund. So that was a gap. And then the other thing, quite frankly, is that, I love to build. And so I certainly don't want to build another, a startup. But I did, and I think the same is true for my partners, that we wanted to build something. To create a brand and to create an infrastructure and to create an impact. So that was the origin behind NFX.
Wow, I love that story. We're at the last part of the interview. I have 3 questions for you. Who would you invite to your dinner party? What's your favorite book? And who made the biggest impact in your career?
Okay. So who would invite to my dinner party? This conversation sparked, like, I'd love to have dinner with Andy Ratcliffe again. So Andy Ratcliffe was one of formative kind of like mentor advisor. So he was a founder of Benchmark. He was my advisor at GSB that helped to get Trulia on his path. And we've stayed in touch over the years. So he's a professor at the GSB. So, I'd love to kind of, it's been a while since, had dinner parties mid-COVID, but Andy's just an exceptional and fascinating guy. Sorry, the next question was favorite book.
Favorite book. Okay,
well, we'll do the persistence theme. So so the story of Shackleton, I think it's called Endurance, which is this sort of polar expedition, which is just like, it's just such a great book. I love those biographical books of stories of kind of incredible feats. So I love that book. And then who are your kind of mentors, you said?
Yeah, basically. Who made the biggest impact in your career? It could be a peer, could be a family member, or could be anyone.
Well, I think going back all the way, I think it's I guess got my first opportunity in technology world with Martha Lane Fox and Brent Hoberman from lastminute.com. They're dear friends and exceptional people. So like those, they had the biggest impact on me. And Take Your Chance back then as a sort of 22-year-old. They had the biggest impact.
Last question. Where can we find you when you're not at work? So basically, what's your hobby?
What are my hobbies? Why, I have little kids, and so
with the kid.
And so I I don't know, in the sort of soccer field or the trampoline or so I think that's been taking a lot of my time right now. I would hobbies, I do love to travel. And so like, travel and explore and see the world. That's like, and I think that will come back. I literally just bought an Airstream. So we're like going to be, rather than traveling internationally, we'll be traveling to the national parks and around the US. So you'll find me in some, national park, I think.
Awesome. I will see you in the parks then. Pete, thank you so much for coming onto the show today.
Thanks, Grace. All right. Take care. Good to see you.
You too. That's all we have for today. Thank you so much for listening to this episode of Smart Venture Podcast. If you like it, please leave us a quick review and hit subscribe so you don't miss any tips from the experts. If you want to receive our updates, please leave your email at smartventurepod.com. If you want to connect with me, all my socials are at Grace Gong GG. Besides LinkedIn, it's just Grace Gong. I'd love to connect with you and let me know your thoughts about the show. Now you can also listen to Smart Venture Podcast on YouTube. Go to smartventurepod.com, click the YouTube link on the top banner. Don't forget to hit subscribe and smash the like button. See you next time.